Hi and welcome back to Cheeky Crypto. Today guys, we're going to be diving down into the world of Multivac to see exactly what has been going on with the price action of MTV. As we get into this video, if you do find it useful and informative, then hit that like button, really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap that bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Right, with all that said, done, and out of the way, let's take a look at the damage here for Multivac and see exactly what is going on and what we should expect to happen next. Okay guys, so we're just going to start things off with our weekly chart like we would normally, just to kind of go through that overall structure, make sure that we're all fully aware of the kind of longer term picture, because there is of course a lot of volatility on those smaller time frames, right? And it's quite easy to kind of get lost in and amongst the noise that is the hourly charts, 15-minute charts, etc. Right? It's good, and it's really important that we do zoom on out and we pay attention to the big macro picture, so we understand that things are still looking pretty good. We're still on track for some pretty good kind of I guess end of year, beginning of 2022 kind of price predictions for this end of time, right? So we are looking pretty good there. And obviously, anyone who's been watching the previous couple of videos that we did on Bitcoin and the general market overall will be aware that Bitcoin completed its ABC. It did actually pull down a little bit further. And this is mainly just around liquidations. Over $800 million of liquidations did occur. Obviously, leverage is highly risky, and we don't use anything like that on this channel. We don't talk about leverage positions or anything like that because they are highly risky, right? And you do tend to lose a lot of money if you get involved with those kind of things. But obviously, that's exactly what happened. We saw $800 million wiped out, mainly around Ethereum, Bitcoin, and some of those top coins. Obviously, that's where a lot of people were kind of focusing in on long positions. Obviously, it got shorted out. And obviously, the rest of the market gets affected by it, right? We saw MTV pull back into some pretty interesting low areas as well. And again, some accumulation could have been had at those areas, and we'll talk about what's going on there, and just to see whether or not there's an opportunity to pick up some more Multivac before we continue this growth to the upside, because ultimately I do feel very bullish still. We're still in a bull run, and we are looking to continue this growth to the upside, but nothing moves up in straight lines. And these are corrections that do happen, specifically when there's too much leverage in the space, too many retail investors using leverage. And obviously that can be taken care of very quickly from the institutions and of course the whales. So on this weekly chart for Multivac, we obviously have good structure coming in here. That's not following the same kind of pattern that you see with other kind of altcoins to the same degree, but there is, I guess, a bit of an impulsive move. You can kind of see that here. Wave 1, wave 2, wave 3, wave 4, and then we're looking to go up into wave 5, right? And on this particular model, we take into consideration the trends that we have going on for Multivac, right? So when we actually take my pen here, we can see that the low end of wave 2, the high end of wave 3, and the low end of wave 4. We take into the consideration those three trends, as in we take into consideration the downtrend here, the uptrend for wave 3, the downtrend for wave 4, and all three of those allow us then to see that we could potentially be moving out quite significantly. Okay, and what we'll do is we'll actually go ahead and grab hold of our trend-based fib and just plot that out, right? So we'll take the low end of wave 2, we'll take the high end, I'll just draw it out all the way over here, the high of wave 3 and the low of wave 4, right? This actually shows us moving out to 7.9, right? Slightly lower than the all-time high over this end and the bear market down here, this bear market low. And when you take those into consideration, you see 9.2 cent. Okay, so that's just that one downward trend predicts out 9.2 cent for the bull run. But the current trends of the bull run, and considering how it started, is actually indicating a little bit short of that, right? So we have to be mindful over what is going on in terms of our wave 3 to 4 correction here. This shows 7.2, and obviously the trends of wave 2, wave 3, wave 4 showing 7.9. So straight away we know that there's a kind of an area that resonates really well with the charts, right? This is around that 7.2 to 7.9 cent area. With all that being said, though, with over 3.3 billion out of the circulating supply actually staked, that actually has reduced the supply that's readily available for purchase. So ultimately, that actually has an impact on the trend. So basically, with the mainnet going live and staking going live recently, the trends that we were actually using, wave 2, 3, and 4, we didn't actually have that fundamental shift in the space. So it's obviously something that we can take into consideration, that actually we might spike up higher than the 7.2, 7.9 scenario, okay, because we have had a fundamental shift, but we're yet to actually really experience what that means. As in, once we start seeing FOMO and we start seeing marketing, we start seeing it listed on exchanges, are we actually going to push higher than that 7.2 to 7.9 cent range? I think so. I think we're going to smash past 10 cent, and we'll probably get closer towards that 30 cent level if we have some good marketing from the team. So I do think there's a lot of kind of positivity going on with Multivac, and what you're actually looking at is a Black Friday special almost with the hourly chart, which we'll get into in a moment. So overall, I'm pretty confident still in MTV and Multivac and everything that's going on there. We've obviously seen the new net launch. We've obviously seen, the staking elements, and that's kind of going strength to strength. And of course, we have the NFT platform as well. Smart contracts are next. We're going to start seeing, things get built on this system that's going to help, price discovery and get some kind of FOMO activity going on at later stages. So do expect some interesting things for MTV here, but it is kind of in the world of speculation. If we want to stake to the technical analysis, then we are talking about 7.2 to 7.9. But I do feel that with the fundamentals that are shifting and adapting, like Cardano, I think the charts aren't necessarily going to help us in that kind of end of year kind of prediction, or at least by the peak of the bull run where we think it's likely to go. So we speculate on that. Otherwise, we end up with some pretty good, interesting areas from a technical point of view on the chart. So that's your weekly. It's pretty well structured out. When we come into our daily chart, we can of course acknowledge what's been going on recently. We had this downward trend, upward trend, triangular wedge appearing here. We had the breakout, we pushed up towards new all-time highs before pulling back down, big ABC. And again, this ABC is something that pretty much Bitcoin was also following at the time, right? We pushed up, we had the A, we had the B, and we pulled back for the C. Okay, but this doesn't mean that it's actually the end of of the correction, right? We completed this ABC. If I actually grab hold of that and we actually measure out our ABC move, we can see that we just overextended it, and actually we completed the C wave, right? So that's fine. We know that the completed ABC on the daily, this actually puts us into an oversold area on the daily chart, so we can start to see this growth over time. We would be looking for an ABC up ultimately, right? And again, this will actually happen over a course of several days. So overall, on our daily chart, things are looking okay. We're oversold, we've completed the ABC, but we are still expecting volatility on the smaller time frames. These smaller time frames obviously is where you start to see lots of micro movements, right? And it's the place where you're going to get confused, you're going to get lost, and you're going to see wave after wave of different things going on, head and shoulder patterns, inverse head and shoulders. It's going to be messy, right? There's a lot of stuff going on in there. Now, this is really where you get into your trading, right? You spend a lot of time on those smaller time frames when you're actively day trading. If you're not day trading, there's no need, in my opinion, to actually be down focusing in on those smaller time frames like the 5-minute, the 15-minute, 30-minute, 45-minute, whatever, right? Now, we dive down into the hourly to give you a scope and an idea as to what is going on so you can prepare ourselves. The portfolio might get hit briefly before it moves on up, right? The last thing we want to do is cause panic and start selling when it's nice and low, because the hourly is looking like it's going to go down lower, right? Because that's the most volatile area of the chart. So we don't necessarily want to be doing too much of that. So we obviously like to make sure that we pay attention to the daily, the weekly, good structure, good focus on pushing further forward. But we are very aware that on the hourly chart, there might be more volatility, moving up, moving down, going sideways, and it can look quite scary. So before we jump down there, we are going to jump over to the 𝗖𝗢.io dashboard. Links in the description down below if you're not familiar with 𝗖𝗢.io, but they use artificial intelligence, machine learning to help us understand the underlying value of cryptocurrencies, i.e. they give us a little bit more information that you don't normally get just from the charts. And it's actually been right more times than I can count, and ultimately it's actually indicating exactly what we're seeing in the charts, and it did actually indicate this ahead of schedule. Anyone who wants to watch back on my VeChain video where I said I would be exiting the market if I was in an active trade with VeChain, because it is indicating that it could go up but could also pull back. And what did we actually see? We saw it pull back quite heavily, right? So again, that is indicated from the 𝗖𝗢.io dashboard. Okay, so if you're not already, go sign up. It's completely free. You'll have access to all of this data, and you won't be disappointed, in my opinion. With all that being said, this is the Multivac charts and the Multivac data. We have a B3 rating overall. Okay, so in overall, that's on the cusp of actually going into the worser grades of C1 and C down to C3, right? So we know we're on the worst end of neutral. Okay, so it's good to understand that. Now we can get into the data a little bit further. and see exactly what's going on. We have a fear and greed index that's B3, so very similar to our overall rating. This is actually indicating that they're on the cusp of extreme fear, and we should be concerned. At the moment, we're actually neutral, but it won't take much more of this downward trend to trigger a bit of a fear mode for Multivac, and that could actually cause the price to pull back a little bit on those smaller time frames. Now, the Sharpe ratio is probably one of the most interesting ones that I like to look at. This is our risk-reward ratio. Okay, and right now, we're actually dropped below the 50-day average, and it is indicating that the rewards or the risks outweigh the rewards, right? So it's important that we acknowledge that exposure to Multivac might not be on everyone's radar right now. Now, I'm not a day trader. I don't buy and sell actively on these cryptocurrencies, but I will take advantage of scenarios where the price is pulling back. The fact that the Sharpe ratio is at a C2 rating and below that 50-day average, this is basically indicating that we could potentially see some more volatility on those smaller timeframes over the next 24 to 48 hours. Now, we can see that we've been down here for a few days ahead of obviously the actual pullback. This is what I was talking about in terms of getting that early indication. And we can also see that ultimately we are plateauing here, and we're waiting to see if we can actually get this reversal and pull back up. Okay, we actually did dip down below this area briefly in September as well. So again, we are monitoring that situation to find the opportune times. What you'll find is our Sharpe ratio will correct before the fear in the market does. Okay, and that is where your opportunity lies. So do watch that one closely if you're, signed up to 𝗖𝗢𝗠𝗠𝗘𝗥𝗦. Okay, so at the moment, this is basically indicating that we might not want to expose ourselves to Multivac right now. So do watch that one. And with that being said, though, I'm not planning on selling any MTV, and I have got millions of it. So again, I just ride the storm. I don't like to just day trade. I just build positions, etc. Okay, so for me, this is perfectly fine. I'm aware that we are expecting volatility, and I'm mentally prepared for that. As we come down, we have some problems with liquidity, obviously, caused by a mass sell-off. The liquidity is going to get hit hard. And right now, this is also a C2 rating. So again, understandable as to what is going on. It might make buying and selling Multivac a little bit more difficult than you might be used to, specifically on those exchanges without the volume behind them. Okay, so do monitor that as well. Make sure you've got access to a good exchange with good volume going through it if you are actively buying and selling MTV. Moving averages obviously have been affected, and the profitability is still up there as an A1. Considering how profitable it has been so far, it's pretty obvious that that's going to continue to be up at an A1 rating. So overall, the underlying data is indicating some pretty interesting things for us. One, obviously, we're expecting volatility on the smaller timeframes over the next 24 to 48 hours, and we'll see how this kind of corrects itself overall. There's fear creeping into the market. Do expect some extreme fear to actually trickle into the MTV Multivac world, and then we are waiting to see the reversal on that Sharpe ratio, which will be a good buying opportunity. So do watch out for that one. So with knowing all of these things, let's actually jump back down into the charts for Multivac, go into the hourly view, and take a look at what's going on. Obviously, we had our initial kind of buy zone scoped out for the members. This is an area that we were looking at trying to get into, and we can see that we actually did ride this quite nicely with this A, B, and C coming up, right? So again, we overextended this, and if it wasn't for this kind of pullback that we had over here most recently, then actually I think that would have been a really good kind of continuation to the upside before getting pulled back down just 2 days or 3 days ago. Now again, this sort of follows the same kind of pattern with an ABC. And you'll see this all the time, specifically on these smaller time frames. We have those ABC moves. Okay, and you can see there's a bigger one over here where we actually pulled back A, B, and C. And obviously we're pushing up, right? But we actually haven't pulled this up just yet, and we are quite high on that stochastic. So whether or not I need to look at this at a smaller time frame to see whether or not there is actually a B wave in here. But otherwise, this A wave is unusually high, and we haven't actually fully corrected. I think this is actually more likely that we're in an ABC to the downside here, or something like that. So we'll just have to watch that one to see what goes on. Ultimately, we are expecting volatility. Do expect ourselves to trade sideways here with Multivac for a little while to continue this kind of motion. Now, we have found good support on 1.79 or 1.8 cent. You can see that we bounced right off from this area, and like a rocket, we moved to the north, and then we pulled back down again. Okay, and this is another ABC move, looking to pull up right now. So again, we'll take a look at that. A, B, and C. And then what we're doing is we're basically just tracking here with an A, a B, and then we'll pull that up for a C, but then do expect ourselves to pull back down. I think there's another opportunity here, depending on the severity of the next kind of move to the downside, to actually trickle this area again, right? So come back into that 1.8 zone. If I actually go ahead and grab hold of my rectangular box and just quickly mark that up, I think we want to be aiming for anything inside of this area. Okay, looks like a pretty good opportunity. So basically that brings us in on 1.842 down to 1.8. That's the interesting area. If we actually come down into this area, then we might actually end up with a pretty good ABC back to the upside. We'll be able to take advantage of that buy zone. But that doesn't mean that actually the pain is over long term. It just means that there's some trading patterns that are forming out here on our hourly chart. But ultimately, the longer term vision is still to continue to move to the upside. Overall, despite the volatility that we're finding here, there's some opportunities to build a bigger position if that is our thing. My bags are fully packed with MTV. I know Chris's are as well. So ultimately, it's now just for us about riding out, taking out some of these key levels and maybe selling on the way up, depending on how things kind of progress into December and early part of next year as well. Ultimately, we are looking to sell out majority of our crypto, about 90% or so of it, during the peak of this bull run, and then obviously accumulate heavily in the bear market as we have done previously. So if you really want to actually see your portfolios better than worse, then ultimately it's the bear market for you, because although bull runs can be fun and exciting, they're really actually quite frustrating because they're very emotional things, right? But your money is actually made not in the bull run, it's actually made in the bear market. So do join us for the bear market, where we actually accumulate positions, specific projects in volume, and actually ride that into the bull run, because basically all you're doing is two things when it comes to a bull run. One is managing your expectations, and two is managing your emotions. If you can control those two things, you're going to be doing absolutely fine during a bull run. But in a bear market, it's all about researching those projects, finding the projects that are undervalued and accumulating them in serious volume ahead of the bull run. It's at that point that when we talk about 18,000% gains, that's from the start of the bull run, right? Through to where we are today. So that only happens if you're in it before the bull run starts. So do join us for the bear market. It is going to be more exciting than you might believe it to be, and you'll also accumulate very good positions on some fantastic projects for the next bull run. So guys, I'm going to leave that video just there. Hopefully you have found this useful and informative. If you have, hit that like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap that bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.